Realization account, that is, you have to bring all the assets except cash or bank and profit and loss account. They have not given any information. In such situation, it is assumed that goodwill has been sold at its original value. Debit side is more than credit side. It means what? Realization loss. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today we are in the 7th session of Unit 6, that is Dissolution of Partnership Firm. So my dear students, let us see what we have discussed in a previous session. So in a previous session, we have solved a problem on dissolution of a partnership firm. So when the firm closes down, what are the accounts that has to be prepared? That we have learnt in a previous session. That is, accounts to be prepared during dissolution of a partnership firm. In today's session, we shall continue with new problem. So this is a question paper problem which was asked in your examination. Let us see, and this is a very important 15 marks problem. Let us see how we are going to solve. Very easy. Only thing is that you have to understand the concept. Now go through the problem here. Prashant, Praveen and Prakash are partners sharing profit and loss in the ratio 3:2:1. Now, who are the partners here? Prakash, Prashant and Praveen are partners and their profit sharing ratio is 3:2:1. And they have given the balance sheet as on 31st/12/2016. So, they have given a balance sheet. Let us see what the balance sheet contains. So, there are certain assets like bank 6,000, debtors 33,000, stock 36,000, plant and machinery 90,000, profit and loss account. So, here you have to remember profit and loss account is given in the asset side of the balance sheet, which means what? It means loss. So, 72,000, goodwill they have given 18,000. So, these are the assets. Now, coming to the liability side, we are having creditors 78,000, loan from Prashant. Now, Prashant is a partner and he has provided loan to the partnership firm. So, loan from Prashant 45,000, reserve fund 24,000, bills payable 12,000. Next, they have given capital of Prashant 60, Praveen 30,000, Prakash 6,000. So, total 96,000 and total both the side is 2,55,000. Now, let us see what they have given. So, they have given certain adjustment on the above date. So, on the above date is nothing but on the date of balance sheet, that is 31st/12/2016. On the above date, they decided to dissolve, in the sense they decided to close down their firm, dissolve the firm, and the assets were realized as follows. So, they have given certain assets which has been realized. Debtors rupees 28,000, machinery, plant and machinery rupees 60,000 and stock was taken over by Prashant. Now, here two assets, that is debtors and plant and machinery were realized, in the sense they has been sold, and Prashant. So, Prashant is a partner who has taken over the asset at rupees 36,000. The creditors and bills payable were paid in full. So, this is what? It's a liability, that is creditors and bills payable, they were paid in full. Realization expenses amounting to rupees 3,000. Now, realization expenses, so it has been amounting to rupees, how much? 3,000. Realization expenses is nothing but dissolution expenses. So, during the process of dissolution or during the process of closing down of the business, so they have incurred certain expenses which is known as dissolution expenses, and the amount is how much? 3,000. Prepare necessary ledger accounts. Now, what you have to prepare? So, they have just given, we have to prepare necessary ledger account. So, first account to be prepared is realization account. Next, we have to prepare partners capital account. Partners capital account. And here, a partner has provided loan, right? So, we have to prepare, who is that partner? Prashant. So, we have to prepare Prashant's loan account, and next we have to prepare bank account. So these are the necessary ledger accounts to be prepared during dissolution of partnership firm. Hope you have understood the question. They have given the balance sheet and they have given certain adjustment where they have told they have sold certain asset and certain asset has been taken over by the partner and they have paid the liability in full and they have given dissolution expenses also. Now we shall see how we are going to solve the problem. First account to be prepared is realization account. So what is the format of realization account? You'll be having debit and credit side. Under debit side, particulars, amount, credit side, particulars and amount. Now first what you are going to record in your realization account, that is you have to bring all the assets except cash or bank and profit and loss account. Now go through the balance sheet. So here we are having certain assets. So you have to take all the assets except cash or bank and profit and loss account. Now here there is bank, so we shouldn't take. Next we have datas, we have to take stock, we have to take plant and machinery, we have to take profit and loss account they have given, so we are not going to take here. Next they have given goodwill. So take all these four assets at their value what they have given in the balance sheet. That is debtors 33,000, stock 36,000, plant and machinery 90,000, goodwill 18,000. Now where you are going to take these assets? To the debit side of realization account. So see how we have taken two debtors 33,000, to stock 36,000, to plant and machinery 90,000, to goodwill 18,000. Now we are done with our first step, that is bringing all the assets except cash or bank and profit and loss account. Now bring all the liabilities together, that is outsiders liability except profit and loss account, reserve, fund, partners capital and partners loan, except the 5 items. Which are the 5 items? Partners capital, partners loan, if there is any reserve, if there is any fund, and if there is profit and loss account. Now go through the liabilities. So we are having creditors, we have to take loan from Prashant. So here Prashant is a partner. Simply if they have given loan, then we have to take, thinking that it is an outsider's liability. Clear? Outsider's loan. But here they have given loan from Prashant. In the sense partner's loan, we are not going to take here under realization account. Next we are having reserve fund. We are not going to take reserve fund. Next, bills payable. So we have to take bills payable. So it's a liability. Next we are not going to take partners capital. So transfer all the liabilities except reserves, fund, profit and loss account, partners capital as well as partners loan. Now transfer all these liability to the credit side of your realization account. So by creditors 78,000, by bills payable 12,000. So this is your second step. Now coming to the third step, so we have to sell all the assets and make payment to the liabilities. So your third step is selling of assets. So for this you have to see your adjustment. Now see your adjustment, they have told debtors 28,000. So these assets were realized. It is debtors 28,000, plant and machinery 60,000. Only 2 assets are realized. Now we have to take this assets. So assets is nothing but it is been sold. So when the assets are sold, what comes to the organization or firm? Bank or cash, right? So record that in your realization account. By bank account, write in the bracket assets realized. So we are having debtors 28,000, plant and machinery 60,000. But they have not given any information about goodwill. So here goodwill is not been sold or goodwill is not taken over by the partner. So they have not given any information. In such situation, it is assumed that goodwill has been sold at its original value. Now if you see the value of goodwill, so goodwill is how much? 18,000. So we shall take that goodwill 18,000, assuming that goodwill has been sold at its original value 18,000. So how much you'll get? 1,06,000. When you add 28,000 plus 60,000 plus 18,000, you'll get 1,06,000. So this is your third step. That is for assets sold. So here assets has been sold. Now your fourth step is you have sold the asset, you have to make payment for outsiders liability. Now see the adjustment what they have told. The creditors and bills payable were paid in full settlement. So they have paid in full. Full in the sense they have not given the amount, but paid in full in the sense we have to see the balance sheet, what is its value, and we have to take the full amount. Now if you see the balance sheet, creditor 78,000 and we have bills payable 12,000. So these are the two liabilities. Okay. So here we are not going to take this loan as well as reserve fund. So the liabilities is only two what we have recorded in the realization account. So we have recorded only two liabilities and these two liabilities were paid in full. So when liabilities are paid, so what is the entry? So your entry will be realization account data to bank account. So write to bank account, liabilities paid, creditor 78,000, bills payable 12,000. When you total this, you will get 90,000. So this is your fourth step, that is payment of liabilities. Next, your fifth step is check whether any asset is taken over by the partner. For that, see your adjustment. So here stock was taken over by Prashant. Here they have told stock was taken over by Prashant. Then if any asset is taken over, transfer to the credit side of realization account. So how to record? By Prashant's capital account. So by Prashant's capital account, asset taken over, or you can write it as stock taken over. Stock is an asset, right? So stock taken over at what rupees? 36,000. Now, so this is what? This is your fifth step. It is for asset taken over. Now check whether any liability is taken over. No, because the liabilities has been paid in full, right? Now what you have to do? See the adjustment, we are having realization expenses, right? Or dissolution expenses. Record that expense. So if expenses are paid, what is the entry? Realization account data to bank account. So how do you record? To bank account in the bracket dissolution expenses or realization expenses. So what is the amount? 3,000. So write that 3,000 here. That is for dissolution expenses. So this is your last step, that is sixth step. So if liabilities were taken over, then we have to record in the debit side. You have to transfer to their capital account. In the bracket, we have to write liabilities taken over. Now what you have to do? Balance both the side and the balancing figure will be either realization profit or realization loss. Now if you add all the items in the debit side, so that is 33,000 plus 36,000 plus 90,000 plus 18,000 plus 90,000 plus 3,000, you will get 2,70,000. Whereas coming to the credit side, if you add all these items, you will get 2,32,000. In the sense 78,000 plus 12,000 plus 1,06,000 plus 36,000, you will get 2,32,000. So in this problem, debit side is more than credit side. It means what? Realization loss. Okay. If the credit side is more than debit side, it is realization profit. But in this problem, debit side is 2,70,000 whereas credit side is 2,32,000. So debit side is more than credit side. So what it is? It is realization loss. So by loss transferred to partner's capital account. So this loss has to be transferred to partner's capital account. So you will get a balancing figure. So write 2,70,000 both the side minus 2,32,000. You will get the balancing figure of 38,000. Now what is this 38,000? It is realization loss. So transfer that loss to partner's capital account in their profit sharing ratio. Now who are the partners? Prashant, Praveen and Prakash. What is loss? 38,000 and the profit sharing ratio is 3:2:1. It is 3/6, 2/6 and 1/6. So 38,000 into 3/6, 19,000. Whereas for Praveen, 38,000 into 2/6, 12,667 and Prakash 38,000 into 1/6, 6,333. So this is how you are going to prepare your realization account. Next account to be prepared is partners capital account. Next ledger account to be prepared is partners capital account. Now what is the format? You will be having debit and credit side and draw column for each partner. Now who are the partners here? Prashant, Praveen and Prakash. So particular Prashant, Praveen and Prakash. In the same way credit side, particular Prashant, Praveen and Prakash. Now which is your first step? Bring down the capital of the partners. Now if you see the balance sheet, so here we are having capital of Prashant 60,000, Praveen 30,000 and Prakash 6,000. So transfer this capital. So how to transfer? By balance brought down. So write by balance brought down Prashant 60,000, Praveen 30,000 and Prakash 6,000. So what it is? It is a capital of partners which was there in the balance sheet. Transfer that capital. Next, we have prepared realization account and we have got realization profit or realization loss. In this problem, we got realization loss, right? So if you see your realization account, we got realization loss of rupees 38,000. So transfer that loss. That is for Prashant 19,000, Praveen 12,667 and Prakash 6,333. Transfer that loss. Where do you transfer? To the debit side of partners capital account. So how do you transfer? To realization account in the bracket loss. So how much? 19,000, 12,667 and 6,333. Now first we have transferred capital. Next we have transferred realization account balance. That is in this problem it is realization loss. Next, check your balance sheet whether there is any reserve, fund as well as profit and loss account. So you have to check whether there is any reserve, fund and profit and loss account. If you find any such kind of item, transfer to all the partners in their profit sharing ratio. Now go through the balance sheet. So in the balance sheet, we are having reserve fund. How much? 24,000. So transfer this reserve fund. So there is no other general reserve or any such kind of reserves. And coming to the asset side, we are having profit and loss account 72,000, but it is there in the asset side. So transfer this profit and loss account to all the partners in the debit side of your partners capital account, whereas transfer this reserve fund to the credit side of your partners capital account. First we shall transfer the reserve, that is 24,000. So how to transfer in your partners capital account? That is by reserve fund. So 24,000 into their profit sharing ratio 3:2:1. So you'll get each partner will get 12,000, 8,000 and 4,000. In the same way, profit and loss account. So it's there in the asset side 72,000, transfer to the debit side of partners capital account as to profit and loss account. So how do you transfer? To profit and loss account 72,000 is the amount into 3:2:1. So how much get? 36,000, 24,000 and 12,000. Now we are done with these many items. That is, first we have transferred capital. Next we have transferred realization account balance. Next we have checked whether there is any reserve, fund as well as profit and loss account, and we have transferred that. Next what you have to do? See your realization account, whether you have transferred any amount to partners capital account. So this will happen when any of the partner takes over liability or asset. But in this problem, there is an asset which is taken over by a partner. Now see the credit side. So here we are having by Prashant's capital account. So here this amount of 36,000 has been transferred to Prashant's capital account. So how do you record in partners capital account? To realization account. So to realization account asset taken over, write the amount in Prashant column 36,000. And if you see your realization account, there is no other account which has been transferred to partners capital account except this one, that is asset taken over. Next what you have to do, we have to balance both the side, and the balancing figure has to be transferred to bank account. Here we are not going to carry down that amount because we are not going to prepare the balance sheet. In the sense, the business is not going to continue. So it is going to close down. right? So we are going to transfer to bank account. In the sense we are settling the accounts of the partners. So what you are going to do? First, calculate that of Prashant. So if you see the total of Prashant, 19,000, 36,000 plus 36,000, so you'll get 91,000 in the debit side. Whereas coming to the credit side, so we are having 60,000 plus 12,000. So how much? It is 72,000. 60,000 plus 12,000, 72,000. So your debit side is more. Write 91,000 both the side minus 72,000. Will get a balancing figure of 19,000 in the credit side. So how do you record? By bank account. So what it is? Balancing figure. Clear? In the same way, calculate that of Praveen. So we are having 24,000 plus 12,667. Now if you add Praveen's column, 24,000 plus 12,667 will get 36,667. So this is of Praveen, that is in the debit side. Now coming to the credit side, we are having 30,000 plus 8,000. So we'll get 38,000. So 38,000 in the credit side, whereas in debit side we are having 36,667. So 38,000 is more, right? 38,000 both the side minus 36,667, get a balancing figure of 1,333. So transfer to bank account. So what it is? Balancing figure of Praveen. So balancing figure of Praveen transfer to bank account. In the same way, calculate that of Prakash. So in the debit side we are having 12,000 plus 6,333. So we'll get how much? 18,333 in the debit side. Whereas coming to the credit side, how much? We are having 6,000 plus 4,000. We are having only how much? 10,000. So your debit side is more now. So write 18,333 both the side minus 10,000. You get a balancing figure of 8,333. So you had already written as by bank account. In the same row, write the amount in Prakash column 8,333. So here we are having both the debit balance as well as credit balance. So we have to transfer to bank account. And the next account to be prepared is Prashant's loan account. Now go through the balance sheet. So they have given Prashant's loan from Prashant 45,000. So transfer this amount to Prashant's loan account. So how to record? By balance brought down how much? 45,000. So this is not 30,000, it is 45,000. Now this loan amount has to be paid, right? So it is what? Partner's loan. It has to be paid by the firm during dissolution of a partnership firm. So what you have to do? To bank account, how much? 45,000. So if you total both the side, you will get 45,000. That is in the debit side, and the credit side is also 45,000. So this is how you are going to prepare Prashant's loan account. So what you have to do? Write the heading Prashant's loan account. You will be having debit and credit side particulars, amount, and credit side particulars and amount. Next, in the balance sheet they have given loan from Prashant 45,000. Record it as by balance brought down 45,000, and that amount has to be paid by the firm. So write to bank account 45,000, balance both the side. So this is Prashant's loan account. Next account to be prepared is bank account. So very easy to prepare bank account if you prepare all other accounts correctly. Now what is the format? It is particulars, amount, and particulars, amount. Now, how to begin your bank account? Now, if you see now where do we get the amount for bank account? If you see the balance sheet, that is the question, they have given bank, right? Go through the asset side. Here we are having bank, how much? 6,000. So, bring down that amount in the bank account. So, how to record? To balance brought down 6,000. That is in the bank account. How much? To balance brought down 6,000. Cash at bank, what they have given in the balance sheet. Next, very easy, you have to see whatever the accounts you have already prepared. Now go through first realization account. So in realization account, in the credit side, check any amount which is transferred to bank account. Now here there is an amount. Here we have recorded by bank account. In the sense, for assets realized, we have transferred that amount to bank account. So what is the entry? Bank account data to realization account. So how do you record in your bank account? To realization account, how much? 1,06,000. That is the total of this much assets realized. How much? 1,06,000. So how do you record? To realization account, 1,06,000. To realization account for assets realized, 1,06,000. Okay. Now again go through realization account. Check whether any amount is transferred to bank account. So in the credit side there is no other account. Come to the debit side. So for liabilities paid, we are having two bank account. Correct? So how much? Your entry will be realization account data to bank account. How much? 90,000. So how do you record in a bank account? By realization account, 90,000, in the bracket liabilities paid. By realization account, 90,000, liabilities paid. Next, come to realization account once again. So here we are having two bank account again for realization expenses or dissolution expenses. So entry will be realization account data to bank account. In bank account, how do you record? By realization account, 3,000. By realization account, how much? 3,000. So this is for realization expenses. Now we are done with entry regarding realization account, that is relating to bank. Now go through partners capital account. So in the credit side, so we are having by bank account here. That is amount is in Prashant's column. So what is the entry then? Prashant's bank account data to Prashant's capital account, 19,000. So how do you record in a bank account? To Prashant's capital account, 19,000. So to Prashant's capital account, 19,000. Clear? Yes. Next. Again, in Prakash column also there is amount. So your entry will be bank account data to Prakash capital account, 8,333. So how do you record in your bank account? To Prakash capital account, how much? 8,333. Now again come to the partners capital account. So we are done with credit side. Come to the debit side. Here we are having two bank account once again, and the amount is in the Praveen's column. So what would be your entry? Praveen's capital account data to bank account. So how do you record in your bank account? By Praveen's capital account. So by Praveen's capital account, 1,333. That is the balancing figure, 1,333. Now we are done with partners capital account. Come to partners loan account. So here we have transferred 45,000. Right? So Prashant's loan account to bank account. So in your bank account, how do you record? By Prashant's loan account. By Prashant's loan account, 45,000. Now we are done with recording all the entries relating to bank. Add both the side. So when you add debit side, you will get 1,39,333, and coming to the credit side, you will get 1,39,333. So this is a simple problem where you have to properly understand and prepare necessary ledger account. So what are the accounts to be prepared? Realization account, partners capital account, and if any partner have provided loan, then partners loan account, then bank account. My dear students, in today's session, we had solved a problem on dissolution of a partnership firm. See you all in my next session. Till then, take care. Thank you.